All right, happy holidays, everyone. Week 52, Outlook one of two. The second Outlook will actually be on Christmas, so I will still be making that Outlook. It may come out a little later than usual or earlier. I mean, there won't be any market movement, so we'll see what happens. Uh, Another housekeeping thing is I feel like I've been a little bit passive this year in the opportunities based on my models and how I was looking at structure and how I was defining my areas of interest. And so moving forward into 2026, I've altered a few things to engage my activity or really increase my activity in the markets. So instead of looking at areas of interest from the daily perspective, what I'm pretty much going to be doing is defining my macro structure, which is essentially the forest in which I'll be looking. um, that's what the daily is going to be. The 4 hour is going to be the trees that I'm looking for, which is the areas of interest, and then the 5 minute or the 1 minute time frame, which are the only execution time frames that I'll be using during 2026, unless I start slipping or whatever. Those will be the leafs that I'll be using to execute my entries. So, right, so the daily, the macro perspective is what I'm going to define now as the daily is the macro perspective. That's going to be where I define my overall structure, the overall range, the overall run, defining the price legs. Excuse me. The 4 hour is going to be my quote unquote meso structure, and that's the trees inside of the forest. So that's where I'll be looking for my areas of interest and understanding the order flow from that perspective. And so we'll spend a little bit more time on the 4 hour moving forward, and then the 5 minute and 1 minute, which I don't really, go over in the outlooks. Those are my execution time frames. And I teeter between the two. The 5 minute, I think I'm gravitating a little bit more towards, but it's just if I need that little bit of resolution, I'm just gonna, tilt towards the 1 minute, but the 5 minute seems to capture a lot of the risk and a lot of the subtleties that I need to use my models for. All right, so without further ado, let's go ahead and get into the outlook. So like I said, this is week 52, one of two. All right, starting with Euro USD, we are continuing the program, just steady, pursuing this secondary impulse phase. We cleared the next liquidity point. I believe this actually happened last week. So we're just recovering from the downward, I guess, pressure that happened post the liquidity draw from this liquidity point here. And so now we had a little bit of bullish price action here, and then we're moving into the next day. So not much really to be said here. It's just overall from the macro perspective, we are still sticking to the bias that we are in a bullish run. We are in the current bullish price leg, and we are in the second impulse of this bullish price leg. All right, so moving on to GU. Finally! Oh my God! It's been 3 weeks. But yes, I finally had this analysis play out. We talked about it for a while now. We started out looking, or let me back up, I'm getting too excited. From the macro perspective, we identified that we had transitioned from a bullish run into a bullish range back, and then now we are in a bearish run post break of structure here, solidified by that break of structure there. And I explained that I was looking for the pullback of this initial impulse of this price leg to begin here based off of mitigation of some sort of price gap over here. And that took some time, a hell of a lot of time to develop, actually almost a month and a half, almost, yeah, about a month and a half. No, yeah, almost 2 months. No, yeah, a month and a half, whatever. Okay. Anyway, a month and a half to develop, and there was lots of opportunity here that if I was looking from the 4 hour perspective, I could have caught. But from the macro perspective, understanding from how I was looking at the structure and seeing it from the daily, I missed a couple opportunities, and essentially I just sat on the sidelines as this was playing out, and I was keeping tabs on it. And I explained multiple times that I wanted to see this specific high, this specific liquidity point mitigated to solidify this price leg. So now I can finally say that, oh, not that, this low here, let me do this. This low right here is now my external liquidity point. So now we have a an actual price leg based on the anatomy of the price leg. We have a structural point, liquidity point, impulse phase connecting the two, and now we have solidified the pullback by taking out this high. So now, moving forward, what I want to do is look for the origin of the move, assuming continuation of the current bearish trend, which is a bearish run. And so what I want to do is look into the premium side of this market, which I've pointed out, anticipated, multiple times, but now I want to look for the pullback into a premium area of interest and then take plays accordingly to target this external liquidity point. So my target's already set. Now it's just a matter of will the analysis and will the origin of the move play out. And so what I'm going to do here is dive a little bit deeper into what I'm talking about. So now that like I've said, I have my forest. I have the forest defined. So now I want to find my areas of interest. So I won't really be using moving forward the daily time frames for my areas of interest. It's more so just to get the scope or the structure, um, and the major how the makeup of the forest actually looks like from an eagle eye. And so now what I'm going to do is I'm going to shift my perspective here to the 4 hour time frame, and what I'm going to do is look for an area of interest. And so every time I look for an area of interest, because of the principle that I look for, the underlying principle or the main principle is buy low, sell high, or discount premium, right? And then on top of that, the derived principles, or the main derived principle from this, is that understanding in a price leg or in a range, price will not leave that range until it's completely balanced. You have to have, if we're trading, there is going to be static inefficiency, but the markets are constantly in dynamic equilibrium. So what I'm looking for is to find where that point of disequilibrium is and capitalize on it. I'm not going to go too deep into that, but essentially that's what I'm doing. And so because I'm looking for sells, I'm going to look in the premium of this price leg, which exists, like we said, from this high down to this low here. All right. And so if you guys don't mind, I'm actually going to clear off some of this stuff so we no longer need any of this stuff. It's just clutter now. All right. So now, all right, we have that. Cool. We know what that low is. I mean, it's not really important, so I'm just going to actually get rid of that, but I'll have to keep the marker there. And then I'm going to extend this range out. So what I'm going to do now is walk you through. This is exactly how I'm seeing the markets. So like I said, I do technical analysis. Get rid of that and that. And this is what I'm looking at. All right, so from this framework, we've defined our range, we've defined our price leg. From the macro perspective, we defined our forest, which exists from this structural point here down to this liquidity point here, and solidified the price leg by mitigation of this macro liquidity point here. And now we're looking for opportunities to trade. Granted, like I said before, there were definitely tons of opportunities to enter during this run here inside of the secondary impulse. So like the pre-pullback, I still wouldn't consider this the pullback until it solidifies this, but there were definitely opportunities here if I was looking at it from the 4 hour perspective that showed transition, from bearish price action to bullish price action that would initiate the pullback. So I could have anticipated the pullback earlier and got entries here, but I was being very conservative with my execution or activity. So that's that. All right, enough rambling. So in the premium of this price leg, because I said I'm looking for sells, I want to look for specifically the origin of the move, or specifically the area of interest from the 4 hour time frame that gives me the highest probability of understanding the order flow in which I can take an opportunity. Now, what are the things that I look for? They're essentially I call them inefficiency objects. So it's sponsored candles and price gaps. Learn about them in RCV. If you're not in RCV, go, learn their stuff. And this is how I use it. Derived from this principle is I want to look for the origin of the move, which is the absolute best premium or absolute best discount at the time. So if we had just mitigated, or if we've just solidified the pullback here, and we are, deep into premium essentially, I want to start from the very top here, logically, and then assess the order flow moving down towards equilibrium of this price leg, which is this green line, and see where the origin, or essentially the best possible premium play is. And so, like I do, is starting from the high, I see that we just have a wick here, and what I'm looking for is just the balancing of wicks and candles. So do candles, after there's large displacement, so like this green candle, and then we have this large black candle, is this immediately mitigated? As in, do the wicks touch, or does a wick touch a candle, or does a wick touch a body? Does a candle touch a body? And so that's exactly what happened here. So we see that this green candle here, and that generated this inefficient pricing, was immediately mitigated by this upward move there. And so once that moved there, how I'm seeing this is the money moved from here into this area. All right, so now once this was mitigated, this action of mitigation happened here, the money is now in this candle in this area, and then we displace lower. Okay, so same logic applies. Do we have balancing of this candle here from any other candles? No, just straight up no. So this to me seems like an active area of interest that I would look for. This would be a potential sponsored candle. But really, I just call it area of interest because I'm not looking to execute any trades off of it. And so now I see that, and this is my potential origin of the move because we know that the money is not here anymore. It's down inside of here. And as we go lower, what we're looking for now is to see like, hey, okay, we've already identified this, but are there any other opportunities lower? But obviously, I mean, this is pretty much this is what I'm going to be looking for. I've alluded to it too many times. All right, and so now we start going lower and lower, and then once we reach equilibrium, I'm not really caring about this because now we're into the discount side of the market, of the discount side of this price leg. And so assessing this, we can see that pretty much everything below this, void in price here and this inefficiency, essentially, is pretty much balanced. Like all of the wicks, all of this price action from here, we had this downward run, and then this was immediately pulled back, balancing all of the inefficiency. All of these wicks, all of these gaps are filled up until this point, here. And then similarly, as we continue run, we have what I would call efficient price action as we go lower. So, there's potential sponsor candle here. That was mitigated. And as we continued lower, you can see that we pulled back, mitigated this price gap here. And then now, we mitigated that price gap there by mitigation of this pullback. And you can see that the price action is pretty much balanced. So the only logical conclusion here is that there's only one area of interest to play. And this is what I'm going to look for to play. And that will be this sponsored candle, but I'll call it my area of interest. And so because of that, I will be looking for price to pull back into this area of interest, and then I'll be looking for selling opportunities off of this area of interest, or I'll use the model best suited as I do more detailed analysis. Essentially, I'm just going to be looking for my entry. I'm not going to do that here because, yeah. But I'll look for my entry and get that entry and then target for the swing trade exactly what I'll be looking for, which is the bottom of this low, that candle there, or the bottom of this price leg here, and then ultimately this liquidity point here. All right. So in a nutshell, that's what I'm doing. So this is my area of interest on the 4-hour time frame that I'm looking for. Now, the counter analysis, because I always like to be aware of both sides, is this is very strong bullish price action that we have here. So just because we solidified a pullback doesn't necessarily mean that we're going to automatically begin pressing lower. We need to see the action of transition. And so what I would like to see is price to pull back and mitigate this area of interest and then transition from bullish price action, because obviously we need to go higher, and then transition to going lower. I want to see that transition from bullish to bearish price action inside of my area of interest or at my area of interest, catch opportunity and see price go lower. If this continues to go higher, then we'll have to reassess, sit on the sidelines, and wait for what happens at the structural point here. And we'll look at that from the forest level. All right. So yeah, that was pretty detailed, but that's what we finally have on GU. All right, on the NASDAQ, we're steady, just chilling, to be completely honest. We're still, moving higher. Get rid of that. We have that initial liquidity draw that we talked about, and overall, we're still in a bullish run. So there's not really much to say here other than we could potentially, this unwillingness that happened, it failed to continue lower. So this really became unwillingness to go lower, and now we're starting to move higher yet again. And so what we would be expecting is for continuation of this order flow to deliver to this high liquidity point. And if it doesn't, well, this is why I'm starting now to start looking at the 4-hour to get a little bit more detailed analysis here. So the thing that I'm seeing is we have, first of all, the mitigation. What am I doing? The mitigation, that's why, of this price gap here. But like I said, that was a very conservative view. What I want to do now is look at it from the 4-hour time frame. So I was framing up here and seeing this is, hey, from the 4-hour time frame, if I assess, this run here and then this run here and then this pullback, what I'm seeing is from the macro perspective, we have a liquidity draw. That is the pro trim play. On the opposite side, I see a transition from bullish price action to bearish price action. And then I see unwillingness occur to take us higher. And then now looking at this price action, I see unwillingness from the 4-hour to take us lower. But this right here, this unwillingness doesn't really make sense to me if I'm looking at this price gap or this area of interest over here, because there's not really, it didn't really mitigate, to me, this area of interest pretty well. Like, it didn't mitigate 50%, it didn't mitigate anything. So this right here, to me, I'm keeping my eye on. It seems like a very false, like just a random thing to me right now. And this is just also a bias based on the time frames that I'm looking at. But I really wouldn't consider this, a sponsored candle or anything, because it did not mitigate a price gap. Now, I really could argue, is this right here is inefficient pricing, and this is the price gap here that it mitigated, and it tapped into 100%, or just a little bit lower than 100%. So instead of looking at it from this being the price gap, if I'm assessing action mitigation here, I could say that this is the price gap that was generated and immediately mitigated, and then this area of interest, which I would call here, I could see it this way as this being the area of interest, and price came to mitigate this, and it tapped 50%. So I could see it that way, but it's up to debate. So I'm gonna, let's sit on the sidelines a little bit here till it gives me a little bit more clear price action. But this is probably the most optimal perspective that I can look at it, because if I look at it from here, this doesn't really make sense, because based on the action mitigation, this candle here didn't even really mitigate anything. This is just generation of order flow here, but this is here, this is inefficient pricing, and then this action of mitigating that inefficient pricing and then pushing higher, that's more attractive to me. And so I could see, I'm developing the sense right now that this is the reason why we drove higher from here, and we had that transition, and now we're pressing higher. Now on the counter side, what I see is not only this price gap from the daily, but specifically what I should be looking for is the origin of the sell. And the origin of the sell, assessing the price action from this high and low, I see this price gap here. And so if I extend this out, we essentially have not mitigated this price gap. So everything on the discount side over here is balanced, but on the premium side, this is really where we should be looking at if we're looking for a counter trend play here, or this is the counter narrative, is that we do have the liquidity draw, we have unwillingness, excuse me, but at this unwillingness we have a bunch of level liquidity, or essentially equal highs. And so what I would be looking for, just clear as day, is I want to see this liquidity be mitigated, and it's fitting that it exists just before 50% of a 4-hour price gap. And so I would like to see price tap into this price gap and then see if there's opportunities to go lower. If not, then the pro trend play, which is what we should be looking for anyway, is this 4-hour area of interest mitigation and pressing higher to take out the all-time high. So the counter narrative is the mitigation of this 4-hour price gap and going lower. The pro trend narrative, the real narrative, is having the mitigation of this 4-hour area of interest, and then we continue higher to take out this liquidity point, which happens to be the all-time high. All right, so that's what I'm seeing on the NASDAQ. Gold. Yet again, finally, we mitigated the all-time high on gold. There's not really much to say here. We've talked about it, and we followed the price action from the macro perspective. There was tons of opportunities. If you're just looking at how the structure of this looks, if we look at it from the 4-hour perspective, there were ample opportunities to get in on this trade. Even there was still ample opportunities on the daily, but on the 4-hour, there's a lot more opportunities. You can see a lot more areas of interest, a lot more pullbacks into inefficiency spaces to capture risk. All right, and so that ended up leading to the mitigation of this all-time high. So the continuation of the bullish run is still happening. So I can actually get rid of this now, and I can get rid of this. And so now what we have is continuation of the bullish run. So what we want to see in the future is how high does this continue? Do we get a pullback? Do we initiate the pullback? And when does that happen? So as of right now, gold to me is in no man's land. We're just vibing. All right. All right. And then lastly, US 30. US 30 is in a bullish run similar to the NASDAQ. And we, essentially from the forest level, we are just continuing the bullish run. We have a price leg existing from this low up to this high. We could argue that the price leg exists from this low to this high, but because there has not been a pullback yet, I can't say that, right? I have to assume the immediate continuation of low, high, or essentially low, high, low, high, low, high, low, high. And then once we mitigate one of these macro perspective or forest lows, then we'll have the price leg solidified from this low to wherever that high is. All right, but looking at it from the 4-hour perspective, what we can see is we do have, just from here, low, high, low, high, low, unwillingness, break of this low here, and then we have bearish price action here, which led to the liquidity draw of this low here, which led to unwillingness, which led to the liquidity draw of this low here, right? And this liquidity draw, the second one, actually led to a break of structure of all of this bearish price action preceding it, which was from here. And so because we closed above it, this essentially signals to me that we're looking for a continuation of the bullish run. And all this price action, building up here, and all this price action building up here is at odds with at odds with itself, essentially. And so what I would like to see, if we're sticking from the pro trend narrative, is continuation of price action to move higher, but understanding that we do have a counter narrative because of this unwillingness here. And specifically, what I'd be looking for is notice that we have an efficiency, this price gap that was mitigated 50%, and then we have the generation or the mitigation of this, or not mitigation, we have generation of this sponsored candle or this area of interest here that led to the immediate break of structure. And so what I would like to see for the counter narrative to play out is mitigation of this 4-hour area of interest. And then I'll potentially look for opportunities for this for our area of interest. But in the meantime, pro trend still narrative, the pro trend narrative, the narrative is still pro trend. We're still bullish. Mixing up a lot of words here today. We're still bullish, so I want to look for buying opportunities. And right now, there's not really, any. I mean, we already took out this high, so I'd have to wait a little bit and sit on the sidelines for more price action to develop, and then give me opportunities to look to press higher. So that was a pretty long form outlook, pretty detailed, a lot more detail than I've gone in before. I would say expect that kind of level of detail um, into 2026, and happy holidays. Peace.